In the quiet hum of global commerce, a catastrophe was brewing, one that threatened to bring the world to its knees. This wasn't a war fought with armies, or a natural disaster that leveled cities. It was a silent collapse, hidden deep within the veins of our financial system. A crisis so profound, it almost ended global trade as we know it. This is the story of the hidden banking collapse. It began not with a bang, but with a whisper, a series of seemingly unrelated financial tremors, felt only by a select few. Deep inside the intricate world of international finance, a crucial yet little-known mechanism was failing. This wasn't about the stocks you see on the news or the banks on your high street. This was about something far more fundamental. The system that guarantees payments for goods moving across our planet. It's called trade finance, the lifeblood of the global economy. Every day, trillions of dollars in letters of credit and bank guarantees ensure that a coffee grower in Colombia gets paid for their beans, and a factory in Germany receives its components. It's the ultimate system of trust, underwritten by the world's biggest banks, and in the shadows that trust was evaporating. What most people don't realize is that nearly every item you own, from the phone in your hand to the clothes you're wearing, has made a long journey across the globe. This journey is only possible because banks provide the financial grease that keeps the wheels of trade turning. They guarantee that when a container full of electronics leaves a port in Asia, the manufacturer will get paid once it arrives in Europe or America. But what happens when those banks suddenly can't or won't provide those guarantees? The first signs of trouble were subtle: a slight increase in the cost of insuring a shipment, a delay in processing a letter of credit. To the outside world, it was just business as usual. But inside the trading houses and banking headquarters, a quiet panic was setting in. The complex web of credit, which had been woven over decades, was starting to unravel. Banks, fearing hidden risks on each other's balance sheets, became hesitant to honor the guarantees of their counterparts. It was like a game of musical chairs, but with the entire global supply chain at stake. The music was slowing down, and no one wanted to be left without a chair when it stopped. Suddenly the whispers became a roar. A major European bank, heavily exposed to the faltering trade finance market, found itself on the brink. Its failure sent shockwaves through the system. The dominoes began to fall, not in public view, but in the private ledgers of the world's financial institutions. The cost to finance a single container shipment skyrocketed not by a few percent, but by hundreds. For many businesses, it became cheaper to let their goods rot in a warehouse than to ship them. The physical consequences followed swiftly. At the world's busiest ports, giant cranes stood still, like silent sentinels guarding a graveyard of stranded cargo. Ships loaded with billions of dollars worth of goods were anchored offshore, unable to dock because the paperwork, the financial guarantees, couldn't be cleared. Captains and their crews were trapped at sea, their voyages in limbo. On land, the effects began to cascade. Assembly lines in auto plants ground to a halt, waiting for parts that would never arrive. Supermarket shelves started to look a little barer as shipments of fresh produce were delayed or cancelled. The intricate just-in-time delivery system that our modern world depends on was breaking down, link by link. Governments and central banks were caught completely off guard. Their focus was on the public stock markets and retail banking, the visible parts of the economy. They were trying to calm the public while a much larger, more systemic crisis was unfolding behind the scenes. They were treating the symptoms while the disease raged in the arteries of global trade. Secret meetings were held in Washington, London, and Beijing. The world's most powerful financial figures scrambled to understand the scale of the crisis and to forge a response. The public knew nothing. The news reported on market volatility, but the real story, the story of the complete seizure of global trade, was deemed too terrifying to tell. The potential outcome was unthinkable. Not just a recession, but a complete shutdown of international commerce. A world where you couldn't buy a banana from Ecuador, a car from Japan, or a bottle of wine from France. It would have been a regression to a pre-globalized era, wiping out decades of economic progress and plunging billions into poverty. The very fabric of our interconnected world was tearing apart. The lines on the map that represent trade routes, once bustling with activity, were going dark. It was a planetary-scale lockdown, imposed not by a virus, but by a catastrophic failure of financial trust. In the darkest hour, a desperate plan was hatched. A consortium of central banks, in a move of unprecedented and clandestine cooperation, agreed to create a secret liquidity facility. They would become the lender of last resort not just for their own domestic banks, but for the entire global trade finance system. They began injecting hundreds of billions of dollars directly into the clogged arteries of commerce, bypassing the broken banking system to provide the guarantees needed to get goods moving again. It was a financial bailout of staggering proportions, conducted entirely in secret. They had to keep it quiet. Announcing it would have triggered a global panic, a run on banks that would have made the crisis infinitely worse. Slowly, painstakingly, the intervention began to work. The cost of trade finance began to fall. The digital handshakes between banks were restored. One by one, the ships anchored offshore began to receive permission to dock. The cranes began to move again. The containers started their journeys inland. On the factory floors, the assembly lines sputtered back to life. The flow of goods, the pulse of the global economy, began to beat again. The world had stepped back from the abyss. The crisis was averted, but the silence that surrounds it to this day is deafening. No one was held accountable. No major headlines celebrated the rescue. The architects of the secret bailout returned to their offices, and the world carried on, blissfully unaware of how close it had come to a complete economic meltdown. The event was scrubbed from the public record, mentioned only in obscure financial journals, and whispered about in the corridors of power. So the next time you pick up a product and see "made in another country," remember the invisible system that brought it to you, a system of trust, credit, and guarantees that is more fragile than any of us would like to believe. We live in a world built on a complex web of promises, and we came perilously close to the day when all those promises were broken at once. The hidden banking collapse is a stark reminder that the greatest threats are often the ones we cannot see. It's a story that wasn't told, a crisis that didn't officially happen, but its echoes should serve as a warning for us all. Thanks for watching, and if you found this story revealing, please consider subscribing for more deep dives into the hidden mechanics of our world.